we are glad that Mohit spared his time. So let me take an opportunity to introduce him. So Mohit Beriwala, CFA, FRM. He did his MS Finance, and he's an IM Bangalore alumni. He's CEO and founder at Sri Rama Managers. He has got over 19, 20 years of experience in the financial industry. So, be it financial planning, wealth management, investments across, and those who are connected with him know that he also share subtle videos on his Twitter handle, which are very informative and useful. So, a very warm welcome, Mohit. And in case I missed on to any sort of introduction or maybe anything on your prior experience, I would request you to surface that in your opening note, and then we start with the session.
Thank you so much. Thank you, Prince, for having me. We are also SEBI registered portfolio managers. Probably few people know Abhishek Basu Malik. He's a co-founder and a fund manager as well. He manages the direct equity piece. Disclosure: whatever I'm talking about, we already have it in our portfolios, and again, asset allocation is the key, so please make your own judgment. So we also have it in our own family funds and for our investors as well. Basically, that's that. Now, I'm sure a lot of people are aware of what are real estate investment trusts. In case people are not aware, let me just make a quick 2 minute sideline on what is exactly real estate investment trust. So basically, it's a listed form of a trust. अब आप बोलोगे क्या होता है real estate investment trust and everything. Now, let me give you a 2 minute background on why I came across this and why we started. Now, if you've been doing fairly well and if you've got middle class parents like I have, होता क्या है कि they always want you to invest, like they don't understand equity, they don't understand everything. What they say is basically, मोहित यार तू property में रुपए डाल दे. Now, my mother specifically wants me to buy a commercial real estate, and I was like, "Yeah, why do you want me to buy real estate?" So and she has this her feelings also why she buys. So when I would say that we should buy, we should not buy this property, she'll be like, "Okay, Mohit, I understand what you're talking about. That you should not buy a property, but just think about this. जो तुम्हारा हम लोग का घर खर्चा है, whatever your expenses are at home, that rental will take care of that, and that's a financial safety net for the family." I was like, yeah, but the down payment, the EMIs, it's gonna be my headache, right? Plus, forget about the complications of periodic repairs, finding a tenant, letting it out. So this did not kind of appeal to me. Then she would come back and she would say, okay, Mohit, how about let's do a pros and a cons. So I would say, equities, mutual funds, beating inflation, mouth-watering returns. But she would come in with the benefit of diversification and benefit of regular rent coming in. I would counter with the logic that I owned India's best 500 companies, and that's my diversification. I basically wanted to beat inflation, cover my life goals, achieve financial siddhi. But she's like, okay, yeah, mother's being mother. But she would start this whole thing again after 6 months. Now, while I was explaining all of this to her, I would understand there is one chink in my argument, and that chink was the diversification angle. You know, I was right in the middle of COVID, I was thinking, can we have some commercial real estate which will not bother me for any property tax, tenants, maintenance, periodic repairs, something which will give me inflation, like FD say better returns, rentals, probably tax advantages as well, and of course appreciation. Possibly, if it would come in my budget size, like like sachet size, and it would be fantastic. Also, if I wanted it specifically so that I could satisfy my mother and give her peace of mind and say, okay, this is your monthly expenses, this is your rentals which is coming in. I am sorted. Then I realized that there is real estate investment trust. Globally, it's a $2 trillion market. All super HNIs, privately wealthy individuals, they all have about 30-40% of their money in real estate, commercial real estate, and real estate investment trusts. In India, REITs are governed by the SEBI regulation 2014, which is, of course, in line with the global standards, which means three key things. First, at least 80% of the assets of the REIT have to be generating income, which means no dead investments. Second, a REIT is not allowed leverage more than 49% of the total asset value. This ensures chances of failure, chances of disaster happening are very less. And third, and this is where kind of where I got sold. 90% of the distributable cash flows have to be paid out, which means nobody can misuse my money. Every quarter, if the money is being paid out, it's kind of get solved. The cash flows come in. Of course, these guys are listed on the stock exchange. We diversify across commercial real estate across India. I come from a city of Calcutta, and we were earlier, Bengal used to be a major industrialist. I am sure you've read our Sanjeev Sanyal views on Bengal, and I can tell you, Calcutta property growth has not met up with the rest of the country. So with this, we diversify across all over the world, across all over the country. With REITs, we gain property appreciation and rentals. Now, I hate paying taxes. I'm sure a lot of us hate paying our taxes. But in normally, if we get a rental, it is straight away added to our income. I'm saying after property tax adjustment and everything, whatever is the net, it just added to the income. However, in REITs generally give three to four kind of cash flows, four kind of payouts. First is interest, which is taxable at a slab rates. Second is dividends, which is tax free in our hands. Yes, tax free. By it's like tax free बोल दिया तो बस I am kind of like भाई बता क्या है. Third, these guys repay our capital back. Now, earlier it was completely tax free. Last year's budget made a change which said, in fact, 2023 budget, right? Which made a change which says that up to the cost of acquisition, which means let's assume 100 rupees ka face value hai. Till now, if the REIT company has paid out 5 rupees, it is tax free. But once the total cash flows cross 100 rupees, then only it will be taxable. I think we've got a long way to go. So my sense is it is mostly tax free right now. Additionally, if we buy a property right now, we have to pay capital gain tax on selling it, which is 20% after indexation, or under 3 years, it is straight away added to taxable income. In REITs, the short term capital gain is only 15%, and the long term capital gain, again, after 3 years now, is 1 lakh rupees. So, summing up the benefits: instant liquidity, diversification, gain from property appreciation and rentals, and of course, lower taxation. Now, why do I feel that REITs will do fantastic? Uh, Commercial real estate is growing massively. India's offshoring the global captive centers are there. They are already over here, they're expanding. We have 28 years is our average median age, and which is fantastically. We've got about 15 lakh engineering graduates added every year, and these guys need jobs, and they are ideally white collar jobs entry level. Why would we not these global captives come over here? Because our average salary is 1/10. I repeat, 1/10 of global standards. So, and they just have to bring it because it's always going to be margins globally. Addition to that, technically speaking, Our monthly office rent in the gateway cities is about $1 to $2, which is roughly about 80 bucks, 85 bucks per square feet, which is hardly anything compared to global standards. Of course, the Indian demand for office space is also growing. Of course, real estates are going up. Most of these REITs have a rental agreement, which is 5% contracted rental increase every year, or a 15% contracted price increase every 3 years. This is, of course, the global standard. So, which means more or less my rentals is gonna go up every year by 5%. This is my understanding of the construct. Plus, most of the REITs, once they came out, they were like, "Arey bhai, itna capex karna, itna capex karna hai." They were all done generally by Blackstone and other private equity companies. So these guys massively expanded the balance sheet. And this is the reason why over the past 2 years, 3 years, REITs prices did not go up and the dividends did not go up because whatever earnings were extra done, they were used to fund major acquisitions. My sense is these guys have now wisened up and they've realized that they can't kill the golden egg, the golden goose laying egg. Uh, right. So these guys are now focusing on increasing investor payouts. Additionally, you had a lot of space which was under special economic zone, which is going up for denotification, and their rentals are going up massively. Plus, of course, you had the black swan event, COVID, where occupancy went down and work from home started. I think these work from home has automatically kind of come down, and roughly occupancy is about 83% across, and it is gradually inching up. Most of these real estates REITs also have about 20% under development areas, which they are kind of going it gradually. So once that comes in, that is also getting your that is going to be a kicker. Plus, of course, F&B, parking rentals, management, hospitality, they are being done. Addition to that, releasing spreads, which means in case an agreement, if rentals have massively increased in a particular area, but when the lease comes up for expiry and the lessee is not able to increase the prices further, these companies exit the agreement, REITs, and give it to someone else. These releasing spreads, which they are called it, are roughly 15-20% higher rental, which is pretty fantastic. Now, one last thing. Generally, the demand multiplier for commercial office space is roughly 1.6x to GDP. So, generally speaking, over a long run period, occupied office space is 1.6x your GDP growth rate, nominal GDP growth rate. So, we've spoken about commercial real estate, we've spoken about managements, what they are doing. Now, let's see how investors look at it. In India, and I'm sure this is globally, investors look at REITs as a quasi FD play. If you're getting 5% in an FD, you would be okay with the 5%, 5.5% REIT cash flow. But if you're getting 7.5% FD rate, you would be okay to look at 7.5%. Now, three things happened over the past 3 years. First, of course, was COVID, where work from home went up and occupancy went down. Second, it was followed by, and these guys were foolish. They did major acquisitions of land parcels, so they stretched themselves thin. They increased their borrowings, and interest rates started to go up. And they were whipped on the interest costs going up because most of these borrowings are uh, RBI repo rate linked. Fourth, and the most important part, because FD rates went up, the benchmark where which investors like us value these companies also went up. So net effect, the prices didn't do well. So my sense is over the next 1 year, rates should fall by at least by 0.6%. We were very bullish at one company called Embassy Real Estate Investment Trust. We bought it in our portfolios last quarter. I said last quarter. I think the October, November, December. Uh, at 31st of March, we were almost 26% up, which was a pretty handsome returns over the next past 3 months itself only. We made enough money. We think most of the juice was out, and we kind of moved out. We identified another company, Brookfield Real Estate Investment Trust. Now, there are four primarily REITs in India listed: Embassy, commercial real estate, commercial office space REITs are three basically: Embassy, Mindspace, and Brookfield. Embassy, Mindspace, and Brookfield. Both Embassy and Mindspace are now owned by real estate developers. The private equity companies have moved out. Brookfield is the only private equity, or you could say Brookfield is now on the only commercial office space real estate investment trust. Nexus is mostly retail spaces. That's also by Blackstone, but I'm not talking about retail space right now. I'm talking about commercial office space, Brookfield REIT. Now, Brookfield is owned by a Canadian company, which is Brookfield Asset Management. Incidentally, Brookfield Asset Management also owns Oak Tree Capital, which was co-founded by Howard Marks. So yeah, that kind of also very important, which talks about the corporate governance. So Brookfield is 100% institutionally managed office space. They own roughly 2.54 crores of Class A office space, out of which almost 2.07 crores is operating. They have an 80% committed occupancy and roughly 88% effective occupancy. They have a 7.5 years of WALE, which means weighted average lease expiry is 7.5 years. A very important factor for me is that only 42% of its rentals coming from top 10, which means they're pretty diversified. Uh, they have a lot of space in the SEZ, which I think is about, they are operating roughly the SEZ space, if I have to say this, a lot of it is going to come up for conversion into normal space. So they've already applied for conversion almost 1 million square feet, which is 10 lakh square feet. And this is pretty nice. My sense is that over the next year or so, or in the next, in fact, probably this quarter or the next quarter, we'll see quite a number of space getting converted from SEZ and Beam, getting going into normal space. Their top 10 tenants are Accenture is about 10%, TCS 10%, Cognizant 8%, Capgemini 5%. Now, coming back to the whale. Now, why is this important is that over the next 1 year, maybe I will give you an example. Over the next 1 year, my sense is they only have not much of lease expiry happening, which is roughly about zero point 0.9 million square feet. And that is also available at a 120 rupees square feet, which will have a 23% hopefully mark to market. There, most of the space is coming into FY27, which means in the next 2 years, they've got enough space to rent out. I would say this enough capacity coming on track to rent out, and which will not be getting impacted by contract expiries. So this is a very important thing. They've already renewed roughly 80 lakhs in the last 9 months at 19% spread, which means demand is pretty high. Okay, so I've given you this part. Now let me tell you how I look at it in my portfolio and why we decided to invest. First, the major concern: they have a pretty high debt, which is roughly 38.5%, which is one of the highest side of the three REITs, commercial space REITs. The reason is they did acquisitions. Now, other two are available at about 5.5, 6% rentals per square feet. So I'll give an example to you. 100 rupees invested right now, when the others will give about 5.5, 6%. With this, we are expecting about 7.5% of cash flows. यानी कि 100 रुपया पे 7.5 रुपए साल का मिलेगा. My sense is they will have an operating leverage of 7 to 8% over the next 1 year, which will come in from rentals, new developments, and occupancy going up. Uh, our sense is they have said that the management has guided 6 rupees per unit increase in the next couple of years, which is pretty nice compared to their current about 4.75 rupees per quarter, which is almost 1.5%, which is 30% rental increase, cash flow increase they're expecting. I'm keeping that aside. So, okay, few things which I am very, very gung-ho about. First, gung-ho about is they are available at a 7.5% rent cash flow yield right now to us, out of which roughly 40% of it is tax free for us because which is effectively debt repayment for us, which is 2.48 rupees per unit as of the 20th February. So, which means the 7.5%, almost 40% is tax free for me. This is a pretty amazing thing. Compared to that, if you add the tax yield on that, that's effectively makes this about a 8.5 9% kind of a coupon thing. Plus, I have an operating leverage of about 7 to 8%, which is rental increase, new development, occupancy. This gives me a straightforward expectation of about 15 16% a year. Now, come on, I'm not going to be happy with that. I'm also going to be happy because I am expecting interest rates to come down over the next 1 year. And 87% of the loans are linked to repo. So if interest rates start going down, their interest cost will come down, which will increase their cash flows, which will come to me. Plus, investors will then not trade it at 7.5%, they will trade it at probably 6.5%. And when they do that, price goes up. So effectively, I'm assuming, hoping for a 20-25% uh, increase over the next 1 year, cash flows and payouts and price appreciation. Now you will be talking about कि मोहित यार 20-25% तो यार एक एक स्टॉक में हफ्ता कर बढ़ रहा है. What are you talking about? Again, for equity investors, my sense is this is a tactical play. Please use this for your fixed income instruments and when equity market is super high, for of course for diversification. But if you have fixed income money and would like to diversify, I think this is like shooting fish in a barrel. This is a no-brainer. I am always available for question and answers. I'm also there on Twitter and LinkedIn. Thank you, folks. I'm available for questions.
So, Mohit, although you had explained that, but again, all the times the situation is not the same. At times, like when we enter, things have to be in our favor. But if we talk about like what should be our reasonable rental expectations if somebody is planning to keep it for a longer period of time?
So, okay, generally speaking, right now you are getting a 7.5% coupon. So I'll give you an example. Right now, the price is trading is roughly about 257, 258 rupees. They paid about 4.75 rupees last quarter, which is on 20th of February. I'm giving a normalized number of roughly nine. Let's assume 18 rupees a year. Minimum, you should expect a 6 to 7% increase over the next few years. That should be a straight away rental cash flow payout. This 19 rupees will increase by about 6 to 7% at least a year on year. My sense is conservative. If you have SEZ being redeveloped and everything, this number will go up to 7 to 8%. Of course, interest rates going down, their net interest margins will go up, net incomes, and that will go up again further. But conservatively, 6 to 7% should be your cash flow increase. Capital appreciation hoga simply because of investor repricing it. Again, that's a bonus. Remember, everyone else in their space, the embassy and buying space, are trading at about 5.5 to 6.5%. This guy is trading at 7.5%.
Right. And Mohit, on the taxation part, so that is also like changing, or it's more or less fixed in the sense you.
It's more or less stable. The government has taken everything what it can. The loan repayment, which is a very major kicker, that was taken away. So that is still there. That is so dividends are exempt. Uh, Loan repayment, which is basically which they give us our capital back, it's exempt right now, especially for the next few years. So that is that. And capital gains, that is not going to go away. Short term capital gains 15%, long term 10%.
And how fair it would be to like set the expectations for future basis the past track record.
Honestly speaking, these see again, will you tell me that अगर कल कोई COVID आ गया तो occupancy will go down? Yes, it will go down. Do we have it in our portfolio? We have it in our portfolio as of yesterday. If things change, facts change, I change my mind. Having said that, their weighted average lease term is 7.4 years. Their average occupancy is about 83%. Their weighted average rental rate is 133 rupees a square feet. By law, they are supposed to pay out at least 90%. And almost every one of these guys pays about 99 to 100% cash flows. I think it's kind of like said, it's like basically like a property, right? You have a property, you have a tenant, and you've got a huge property, which is almost 2.1 crore square feet operating. You got number of tenants. That's kind of it, yeah. I don't think that's this is like in every kind of an quasi every kind of a instrument. So we are using it for that.
And Mohit, like one of the risks you have already highlighted, but what other risks come to your mind could be potentially taken care of before investing in REITs?
Okay, first, cash flows can go up and down. So it's 4.75 rupees a quarter, right? Sometimes it can be 4.78, it can be 4.4 or 5 rupees. So let's not assume that it will going to go happen. It's gonna be like stable 4.75 because real life business doesn't work like that. So it is that. One of the few major risks which I believe was there was leverage. They have about 38.5% leverage. The promoter, Brookfield, also has a lot, I think about again 2.5 crores of square feet, which they would ideally be looking to sell to a REIT. Probably they will sell to someone else, or they will sell it to this guy, or they'll form another REIT. I do not know. So now the major thing is risk acquisitions. These guys can just continue to do on acquisitions and acquisitions. Uh, so that is one of the major concerns I have. And the leverage is 38.5%. So again, they can't go beyond 49%, and that's a number which is generally very high. So 40% hona chahiye. They have a AAA credit rating, which is very good. Third risk is if interest rates don't come down, they continue to remain elevated. Uh, Global captive growth doesn't happen. Indian property prices do not go higher. Commercial grade A commercial spaces prices because of demand issues, price comes down. So that's also there. Um, I think that's the few concerns, and of course, operational risk and compliance risk are always there. But my sense is, majorly we need to be worried about if grade A commercial space prices are going to go high or low, and what is the global captive demand, and of course, what is the interest rate.
So, as far as liquidity is concerned, so Mohit, how is like the liquidity position as far as REITs are concerned?
It is traded on the exchange, and I think it should not be a problem. In fact, I remember having this conversation with my investment team. We were selling one REIT, and we had a pretty high number of REIT. Almost 40% of the daily volumes ka we was out to sell it for our investors. And we said to our trader, to our investment team, bhai algo laga ke bech. And coincidentally, I think this is very good. We didn't have a price impact. So I am presuming you don't want to buy 40% of the volume, but Even if it is, it should not be a problem. We did have a problem at least.
And the diversification, do you think like they are well diversified across the commercial real estate all across India? And are there any?
Yeah,
Hmm.
so most of the money comes from Bombay, which is almost like 4.3 million square feet. Then they've got Gurgaon, which is again 7.6, but Bombay has the highest rentals. They've got Gurgaon and Noida. So NCR, if you could say, it is a huge, huge space. The problem is they don't have it in Bangalore right now, and they have it in Calcutta, but they don't have it in Bangalore. So this is the only concern I would have, that they don't have it in South India, which is growing. But the others don't have it in Bombay, so this guy has. So I think we are kind of better off betting on this. Um, One important thing is that the promoter has money space in Bangalore, which is roughly about 12.7 million square feet. So my sense is anytime these guys wanted, they could diversify across geographies additionally. When you can have Pune, Chennai, Bangalore, Hyderabad, just by going to the promoter and asking for it. I would rather not that they increase their acquisition and increase their diversification space. I would want them to digest what they have, convert the SEZ areas, and start giving me cash flows.
And Mohit, on the dividend thing, I mean, are we totally exempt or there is some nuances which you would like to talk about?
No, no, completely. Okay. By law of land, dividends are exempt, interest is taxable, and loan repayment is uh, subject to the issue price. It is tax free. Now, not everyone issues accordingly. Every REIT will have a different thing. So I'll give an example to you. Brookfield does not offer dividend. It offers repayment of capital. Embassy will offer something else. Everyone is trying to optimize their taxation, and remember, a lot of these promoters themselves are also owners, right? They also want to lower taxation. So they're all consolidating and reducing this, that they can increase more cash flows. But over a few years, I think over the next 5, 6 years, you will get tax-free rentals, the capital repayment, and then it will go away. But the capital gains itself will be taxed at a lower rate. So you might as well enjoy till it lasts. The loan principal repayment. But yeah, dividend repayment will still be tax free.
So, Mohit, although you had explained very well on that front, so basically the redistribution, which is to the tune of 90%, as you were saying, that the gains are distributed.
That is a minimum thing, but these guys normally do a 99% to a 100%.
And do we also see, I mean, frauds in case of REITs, or it's like totally we can rely on?
I think this is one of the reason why we see these are all audited and everything, and Brookfield is a global company. So my sense is compared to Embassy and Mindspace, this is a much more robust corporate governance. And I think everything is audited and everything is there. There is so these spaces are available, right? Downtown Powai, Mumbai, 4.3 million square feet. Candor Tech Space, 3.8 million square feet. All these are they're all available, which we can see it and go to it. I have myself been to this Calcutta center of 5.8 million square feet, Candor Tech Space, Kolkata. I've been over there. It's a pretty nice building.
And also, is there any segregation on the types? Do we have different type of REITs, and what is specific to them? If there are?
Okay, one important thing which I think is probably relevant is which you in the for the previous question about the fraud thing. Generally, 19-20 hota hai when there is development happening or when there is land purchase being done. Right now over here, all of these places are ready under rentals coming in. They're not land development areas. At least 80% of the area is already occupied and getting rentals. 20% they already own the land, they're just doing the construction. And even if they do an acquisition, they acquire it straight away from the promoter, and in this case it is a global MNC. तो कोई कच्चा पक्का का मेरे ख्याल से इसमें कोई होता नहीं है. uh, Sorry, you mentioned what was the last question? Sorry.
Yeah, I was asking about the types of reads, if there are any
Okay,
segregation on that.
so this is going to be a huge thing. REITs and InvITs. Globally, it's a huge market, $2 trillion market. India may be just scratched the surface. So there are a lot of mini REITs also going to be available. The government of India has announced that it is going to be available. Right now, there are four REITs available in the country: Embassy, Mindspace, and Brookfield. These three are office space REITs. The fourth is Nexus Real Estate Investment Trust, which is into retail spaces, slightly more volatile. We also have that in our portfolio as well, but it's a very different beast altogether. So I think for right now, let's focus on Mindspace. If you have a very view that you think retail spaces, malls, shopping complexes will do very well, then of course Nexus is also a good bet.
Right, Mohit. So, Mohit, although you had covered pretty well across the topic for today, but we also get request that we should also speak in Hindi, our audience. Can we
Right.
summarize what we broadly discussed and conclude, and maybe most of it in Hindi, so that both the audience
Sure.
can benefit? Yeah, Mohit.
In fact, I have this very simple philosophy that you think in English, but if you try to explain it in Hindi, क्या होता है सरल भाषा में निकलेगा और पूरा jargon चला जाएगा. So this is something which I generally try to follow. Okay, real estate investment trust. It's a globally $2 trillion का asset है. हमको प्रॉपर्टी खरीदना पड़ता है, उसमें माथापच्ची होता है, मेंटेनेंस का, रेंटल का एंड एवरीथिंग. इसमें क्या है, हमको खाली भाड़ा मिलता है, एक मैनेजर असाइन किया हुआ है, जो जनरली बड़ी-बड़ी इंस्टीट्यूशन होती है, वो हमारे लिए प्रॉपर्टी मैनेज करेगी, भाड़ा पे लगाएगी, मेंटेन करेगी और हमको भाड़ा देगी. अब क्या पता रुपया गबन नहीं कर दे, तो इसके लिए ग्लोबली रूल्स है. इंडिया में सीबी का रूल है 2014 का, बोलता है 80% ऑफ द टोटल प्रॉपर्टी का जो है ऐसी रीट का, उस पे कैश फ्लोज आना चाहिए, भाड़ा आना चाहिए. प्लस वो उधार नहीं ले सकता है 49% से ऊपर. एंड जितना भी पैसा आता है नेट डिस्ट्रीब्यूटेबल कैश फ्लो, उसका 90% हमको मिलना चाहिए. सो रीट्स क्या है, इंडिया में ट्रेड होती है. हम डाइवर्सिफिकेशन कर सकते हैं. जैसे अगर हम कलकत्ता में हैं, हमको कलकत्ता में स्पेस नहीं खरीदना है, इसके थ्रू हम कमर्शियल स्पेस खरीद सकते हैं अक्रॉस दी कंट्री का. हमको मिलता है प्रॉपर्टी अप्रिसिएशन और रेंटल्स. जनरली रीट्स में इंडिया में 5% साल का रेंटल अप्रिसिएशन का कॉन्ट्रैक्ट में होता है, या 15% 3 साल का किया हुआ जाता है. इंडिया में टैक्सेशन लोअर है. डिविडेंड्स आर एग्जेम्प्ट. सम रीट्स गिव डिविडेंड. एडिशन टू दैट, प्रिंसिपल रीपेमेंट एज ऑफ नाउ इज टैक्स फ्री. ये भी मेरे ख्याल से 4-5 साल और रहेगा. कैपिटल गेन्स प्रॉपर्टी में जैसे होता है, आपको पूरे टैक्सेबल इनकम में ऐड कर दिया जाएगा. एंड लॉन्ग टर्म में 20% आफ्टर इंडेक्सेशन है. यहाँ पे लोअर है. यहाँ पे शॉर्ट टर्म कैपिटल गेन 15% है एंड लॉन्ग टर्म 10% है. मेरे हिसाब से रीट्स क्यों अच्छा करेगा, बिकॉज पहला बात, इंडिया में ऑफिस स्पेस की ग्रोथ बहुत बढ़ रही है, जो जनरली 1.6 टाइम्स जीडीपी ग्रोथ रेट के बराबर होती है. रेंटल्स 5% साल का बढ़ रहे हैं, जैसे मैंने बताया. प्लस इंडिया में ऑफशोरिंग, जो सर्विसेज ऑफशोरिंग है, ग्लोबल कैपिटल सेंटर्स बहुत आ रहे हैं. क्यों आ रहे हैं? क्योंकि हमारी यंग पॉपुलेशन है, 28 साल की. हमारे हम 15 लाख इंजीनियरिंग ग्रेजुएट्स हर साल निकालते हैं और उन्हें जॉब्स चाहिए, जिनकी सैलरी एक्सपेक्टेशंस 1/10 है कंपेयर टू ग्लोबल एवरेज. और हमारी रेंटल्स भी जो ग्रेड ए कमर्शियल स्पेस की $1 है कंपेयर टू वेरी लो एज इंटरनेशनली. नाउ रीट्स में क्या है, मैनेजमेंट बहुत स्मार्ट हो गई है. उन्होंने पहले एक्विजिशंस किया तो बैलेंस शीट को बढ़ा लिया था. अभी पे आउट्स पे फोकस कर रहे हैं। कुछ कुछ स्पेसेस स्पेशल इकोनॉमिक जोन में दिया हुआ है। नाउ सनसेट पॉलिसी के हिसाब से वो एसईजेड्स खाली होने लग रहे हैं। सो धीरे धीरे डी नोटिफिकेशन करके उन्हें नॉर्मली लगाया जा रहा है, जिससे भाड़ा बढ़े। बीच में कोविड आ गया। कोविड आने से वर्क फ्रॉम होम चालू हो गया, ऑक्यूपेंसी आ गई। नाउ वो सो नाउ अबाउट 83% ऑक्यूपेंसी आ चुकी है। हॉस्पिटैलिटी, एफ&बी, अगर कॉन्ट्रैक्ट जब प्राइस बढ़ जाता है, बट सामने वाले 10 जो जनरली 15-20% ऊंचा भाव में आता है, ऑफ कोर्स प्लस 5% एवरी ईयर। हम इन्वेस्टर्स कैसे देखते हैं? हम इन्वेस्टर्स ये रीट्स को एफडी की तरह देखते हैं। हमें लगता है कि भाई अगर हमें एफडी में 7% ब्याज आता है, तो हमें रीट्स में भी उतना रुपया आना चाहिए। अगर 100 रुपये डाल रहे हो तो 7 रुपया हमें बोरोइंग कॉस्ट इंटरेस्ट रेट्स एटलीस्ट 0.6% गिरेगी। एंड ये नीड्स क्योंकि ये भी बोरो करते हैं जो आरबीआई से रेपो रेट से लिंक्ड है, इनकी कॉस्ट कमती हो ना, क्या तो हमें भाव बढ़ करते हैं। प्लस अगर 100 रुपये बोरोइंग कॉस्ट गिर जाती है और हमें 8 रुपये आने लगता है, और हमारी एक्सपेक्टेशन 6.5 रुपये होती है, तो हम कैपिटल अप्रिसिएशन होगा करीबन 10 रुपये के आसपास का। इसमें मुझे ब्रुकफील्ड बहुत अच्छा लगता है क्योंकि ये ग्लोबल कंपनी का पेरेंटेज है, कैनेडियन कंपनी का, ब्रुकफील्ड एसेट मैनेजमेंट। ब्रुकफील्ड करीबन 21 मिलियन स्क्वायर, 2 करोड़ 10 लाख यानी कि लीज एक्सपायरी है। इसके पास ऑफिस स्पेसेस गुड़गांव, नोएडा में है, काफ़ी बॉम्बे में है, कलकत्ता में है। ऐसी जेड से इसको काफ़ी फायदा होने वाला है डी नोटिफिकेशन का। इसके टॉप 10 टेनेंट्स डाइवर्सिफिकेशन है, इट इज़ वेरी डाइवर्सिफाइड अक्रॉस सेक्टर्स। जैसे मैंने बताया, इसकी वेटेड एवरेज लीज एक्सपायरी करीबन अच्छी खासी 7.4 ईयर्स की है। एंड अगले 1-2 साल में उसके पास नहीं है ज़्यादा एक्सपायरी, तो हमें कोई डर की बात नहीं है कि प्राइसेस गिरेंगे। हमारे हिसाब से मैं अपने पोर्टफोलियो में ये सजेस्ट करता हूँ इसको, स्पेशली एफडी जब सुपर हाई है। अगर आपको डाइवर्सिफिकेशन करना है तो देख सकते हैं। फॉर एफडी इन्वेस्टर्स दिस इज लाइक शूटिंग फिश इन अ बैरल। हाथ का चीज़ है, नहीं करेंगे तो गड़बड़ रहेगा, बेवकूफ़ी बनेंगे। कंसर्न क्या है? इसकी 38% डेट है, विच इज़ कंपेयर टू 24-25% फॉर दी पीयर्स, जो मेरे हिसाब से काफ़ी हाई है। इसीलिए इसका भाव नहीं बढ़ा है उतना। बट बिकॉज मैनेजमेंट ने गाइडेंस दिया है कि वो लोन रिपेमेंट पे फोकस करेंगे, एक्विजिशन बाद में करेंगे, तो मेरे ख्याल से ये धीरे धीरे करके ये कंसर्न कमती हो जाएगा। ट्रिपल ए क्रेडिट रेटिंग है, 87% रेपो रेट से लिंक है। करंटली ये 7.5% के कैश फ्लोज पे अवेलेबल है। इसका नेट एसेट वैल्यू 323 रुपया था 31 मार्च 2024 के आसपास, एज पर माई अंडरस्टैंडिंग। 6-6 महीना में वैल्यूशन आता है, तो मार्च वाला आना बाकी है, बट बढ़ाई है सितंबर के बाद से। ये करीबन 257-258 के भाव पर ट्रेड हो रहा है। 20 फरवरी को उन्होंने 4.5 रुपये क्वार्टर का दिया, जिसमें से 2.48 रुपीज टैक्स फ्री था। दिस अगर कंपेयर करेंगे नॉर्मल एफडी से, तो देन दिस बिकम्स पोस्ट टैक्स एडजस्ट करके 8.5% का बैठ जाता है। uh, मेरे हिसाब से ये ओवर द नेक्स्ट 1-1.5 ईयर्स अपने को 20 से 25% देगा कि पहला बात इसमें हमें ऑपरेटिंग लेवरेज मिलेगा, क्योंकि हर साल 5% भाड़ा बढ़ता है, प्लस न्यू डेवलपमेंट, ऑक्यूपेंसी, एफईजेड, जो आपका कम से कम 7-8% पे ले जाएगा। कंजर्वेटिवली 7 ही पकड़ते हैं, तो 7.5 प्लस 7 14.5 हो जाता है। एडिशन टू दैट, इन्वेस्टर्स एक्सपेक्ट करते हैं कि एफडी के मुताबिक ट्रीट हो, तो इसकी कैश फ्लोज बढ़ेगी, तो हमें प्राइस अप्रिसिएशन होगा। एंड ऑफ कोर्स, बिकॉज इसका 38.5% लेवरेज है, एंड इफ इंटरेस्ट रेट्स गो डाउन, जो मैं एक्सयूम करता हूँ एक साल में 0.6% होगा, तो इसकी इंटरेस्ट कैश फ्लोज भी कमती होगी, वो रुपया पूरा बाय लॉ हम इन्वेस्टर्स को आएगा। उससे करीबन 20 से 25% का हमें, मेरा एक्सपेक्टेशन है, ये होना चाहिए। हैविंग सेड दैट, क्या क्या रिस्क मुझे लगती है, पहला बात, हम हमारे पोर्टफोलियो में अभी लेके रखे हैं एज ऑफ येस्टरडे। जब फैक्ट चेंज होंगे, हमारा मन बदलेगा, हम निकल सकते हैं, हम किसी को बोलने वाले नहीं हैं। हम सेबी रजिस्टर्ड पोर्टफोलियो मैनेजर है, हमारे हम दो स्कीम में ये ले रखे हैं, श्री वेल्थ बिल्डर प्लान एंड श्री डायनामिक प्लान। नाउ कंसर्न्स, इंटरेस्ट रेट्स नहीं बढ़े, ये एक्विजिशन करते चले गए, या फिर ब्रुकफील्ड ने अपनी ओनरशिप बेच के किसी और को चले गए, तो कोई रियल एस्टेट डेवलपर को कोविड जैसा कुछ आ गया जहाँ पे ऑक्यूपेंसी कमती हो गई, तो एंड ऑफ कोर्स ग्लोबल डिमांड अगर कमती बढ़ी, यानी कि प्रॉपर्टी प्राइसेस कमती बढ़े, तो इसके 2026-27 में जब बड़े बड़े वो आने वाले हैं, 27-28 में, तो उसके भाव रेंटल्स लोअर प्राइस पे होंगे, अगर ग्लोबली प्रॉपर्टी प्राइसेस, कैप्टिव डिमांड, ऑफशोरिंग का डिमांड कमती आया इंडिया में, एंड इंडिया में प्रॉपर्टी प्राइसेस नहीं बढ़े तो।